during our interaction. Well, moving on, and in keeping with earnings, PTC India has clocked an operationally stable fourth quarter, while total income came in higher by 29%, a little above 3,000 crores. An exceptional item dragged the bottom line lower. To discuss the quarter, I am being joined by Deepak Amitabh. He's Chairman and MD at PTC India. Good morning, Mr. Amitabh. It's good to have you on the show. Take us through the key highlights of the quarter. It has been operationally stable. What has been the key trigger this time around?
Yeah, the triggers have been our consolidation of the business model, basically. The increase has been the strength of balanced portfolio developed over the years, and the flat trend in the short-term trading volumes has been offset by an increase in the long-term and exchange trading volume. So during the quarter, we had addition of 100 megawatt power to Tamil Nadu from Adhanik Power Project. So total volume traded under long-term contracts increased by 23% compared to the previous quarter. And if you see the annual also, in the previous year we had grown by 6%, but this year we had grown by 14% in volume compared to the previous financial year. And if you see the exchange volume also, in the previous year, 14-15, we had done 9.6 billion in it. This time we have gone to 13 billion in it. That is an increase by more than 30%. So it's the consolidation of the volume, and profitability has been very robust this time. Our annual net profit has increased by more than 30%, and the quarterly profit also more than 30%. But we took a provision for diminution of investment based on a lender's report. So we were conservative. 90% of the work is done in that project, but because there were delays, we took a conservative provisioning. And we see we have a very healthy book value, which has gone into 90s now, 94 compared to 89 last year. And standalone net worth also I see, we are at 2,789 crore compared to 2,638 crore. And if I see a consolidated net worth, it is 3,419 crore. So overall, a very good set of numbers.
Sir, on a sequential basis, the units of electricity sold has shown only a marginal uptake. Would you like to offer any comment on that? It's at 9,800 as opposed to 9,761 in the previous quarter.
See, because quarters are different. Because December quarter, India is mix of thermal as well as hydro. So it is always better to compare to the previous year's quarter to quarter. Because quarterly variations are going to be in the, depending upon the volume, like long term, suppose we have hydro. So maximum generation will come from April quarter till October quarter. So, but in December quarter it's different. So it all depends upon what are the shutdowns the thermal power plants are taking. So if you see from the previous quarter, it has been very good. But yes, there is no doubt that in spite of the low purchase intent from the state discom, which continues. And secondly, there are certain initiatives taken by government to improve the sector, like the national new tariff policy, coal rationalization, etc. They are aimed towards improving the offtake and availability of power at affordable rates. But these measures shall take more time to unwind the sector. And accordingly, the result will come in due course of time. Nothing is going to happen in 6 months to 9 months. These are medium-term corrections in the whole sector. Uday, we are very happy. More than 1 crore bonds, 1 lakh crore bonds, subscribed by banks and the financial institution. Now, second thing we have to keep an eye is on the AT&C losses of the various states which have taken over there. So this will be observed over next 1 year, by multiple quarters, and then we can arrive at a proper analysis.
Sir, in terms of weightage, can you share with us what is the contribution in terms of volumes and reliance on thermal power as far as that component is concerned, as also what are the realizations that you're commanding from long-term contracts, since the focus there is now greater?
See, realization is much better in the long term. That's what I said. When the long term is increasing, if you see my yearly, last year my net margin realization during the year was 4.6 paise. Now there is an increase of 8.5%. Now it has become 5 paise. So as we have always maintained that more and more long term and medium term coming into play, not only the volumes will increase, but their net margin realization will also improve. And I am sure, I think it is about between long-term, medium-term and short-term, 40 is coming from long-term, 40-45% is from long and medium-term, and about 50 is coming from short-term.
All right, Mr. Amitabh, thank you so much for joining in with an explanation of your earnings performance and obviously a greater reliance and a focus on long-term contracts commanding high realizations. Those volumes have gone up 23%. The stock is up 2.2% in sync with the kind of stable performance that has been yielded at an operational level. Well, that's about earnings, but moving on to macros now, India's growth forecasts of 7.5% are realistic. That's the word coming in from Anand Mahindra, chairman of the Mahindra Group. In an exclusive conversation with Bloomberg's Eric Schatzker, Mahindra says that the lull in the economy, along with crony capitalism, has been holding back M&M's growth potential. Here's a slice of that conversation.
I think it's realistic, and I must say that